Hi everyone, it's Chris Gibbs here from ICGTAX Partners in Sydney. We've had a lot of inquiries about the coronavirus economic relief package, and so we put together this short presentation covering the government support for employers. Please feel free to pass it on as it is important information for employers at this difficult time. So last night, Parliament passed various bills for the economic relief for the coronavirus pandemic, and this short talk focuses on the boosting cash flow for employers. In short, businesses that have employees are eligible for payments of up to $100,000 between now and October, and these payments will be known as the cash flow boost. So who's eligible? Well, the entity must be a small business entity or a medium business entity, or alternatively a registered charity. The business entity can be either an individual, a company, a trust, or a partnership, but the entity must carry on a business. Now, usually this is obvious, but there are some grey areas. For instance, at the very low end, the ATO has usually focused on the difference between a business and a hobby. But the question will also arise where an entity is merely passively investing. As a general rule, a company which carries on passive investment with a view to making a profit will be presumed to be carrying on a business, but an individual or trustee in those circumstances will not. And the ATO's opinion on these issues can be found in Taxation Ruling 2019/1. Secondly, it requires that the turnover of the entity is less than $50 million, and importantly, this is defined to be the aggregated turnover. This requires the inclusion of the total turnover of connected entities and affiliate entities. In particular, Australian subsidiaries of foreign groups will need to aggregate the group turnover in determining whether this limit is exceeded, as will Australian companies with foreign subsidiaries. Again, this may be obvious, but at the margins there might be questions of the level of common control of businesses or how gross receipts as against net gains are to be included in this number. The $50 million limit is measured either from the most recent income tax assessment issued prior to the end of the particular BAS period, or if the Commissioner is satisfied that it will have aggregated turnover of less than $50 million for the current year. For some companies at the margin, particularly those with increasing or rapidly decreasing revenue, which may move them out of this category from one year to another, this may affect the timing of the lodgement of the 2019 income tax return. Next, it must be an established business. First, the entity must have had an ABN on 12 March 2020, or be a charity that's set up after the date. There is an assumption that some charities will be set up in response to the coronavirus pandemic, and they're included. Secondly, the entity must have either had an amount included in assessable income from the carrying on of a business in the previous financial year, and the Commissioner must have had notice of this before 12th of March 2020. This would presumably include either the filing of an income tax return or the filing of a BAS showing business income at label G1. Alternatively, an entity has made a taxable supply in a tax period that started on or after 1 July 2018 and finished on or before 12 March 2020. In reality, this will generally mean making a taxable supply between 1 July 2018 and 31 December 2019 for monthly BAS lodges, possibly through to 31 January 2020. Now, the Commissioner must have had notice on or before 12th of March 2020 that the taxable supply was made. So this is a fairly low threshold. It requires only a single supply or amount of business income to have been reported to the Commissioner before 12th of March 2020. Also, in determining whether a taxable supply was made, it's assumed that an entity is registered for GST and that any tax-free supplies or input tax supplies are taxable. Well, this will allow the very small businesses that did not register to obtain the benefit. If they haven't filed an income tax return for 30 June 2019 yet, nor a BAS, they may fail the notification requirements. And finally, there's an overall anti-avoidance measure that requires that neither the entity, an associate, or its agent has entered into a scheme or part of a scheme for the sole or dominant purpose of obtaining or increasing the cash flow boost. Well, how much is this cash flow boost? The cash flow boost itself is in two parts: a minimum of $10,000 paid twice and a maximum of $50,000 paid twice, and it's not assessable for income tax. The amount of the second cash boost is dependent on the first cash flow boost payment. The first cash flow boost payment is equal to the PAYG withholdings against salary and wages, up to a total of $50,000 against the March to June BASs. These PAYG withholdings include salary and wages and directors' fees, plus allowances and even withholding agreements. For a monthly remitter, the amount is 3 times the March PAYG withholdings with the same overall limits. This is in recognition that the March monthly payment account will be 1/3 of the amount a March quarterly BAS would have. There's a minimum payment of $10,000 which would apply even if you had no amount to withhold. For example, if your employees were below the tax-free threshold. The second cash flow boost is a payment equal to 50% of the total of the first cash flow boost paid in both the June and September BASs. If you're listening closely, you'll notice that the June quarter is relevant to both the first and second. For monthly remitters, they're entitled to 25% of the total of the first cash boost, and it'll be paid in July, August, September, and October. In order to get this, you must continue to be an employer with a PAYG withholding requirement, but the amount itself is determined by the first cash flow boost payment. So let's have a look at some comparative examples. This table here for a quarterly remitter shows a range of amounts being withheld. For someone who's a very, very small employer, only withholding $200 a quarter, they still get the $10,000 payment in April. For someone who's withholding $20,000, they get the $20,000 in April and $20,000 in July, for a total of $40,000 on the first cash flow boost, and then the second cash flow boost there is the same amount, $40,000, but split over the two. For someone withholding $60,000 a quarter, the first cash flow boost in April will be limited to the $50,000, and then the amounts paid in July and October will be half of that each, $25,000 each. For a monthly remitter, who is typically withholding in the order of $1 million a year, so the small ones are probably not that relevant, but to demonstrate it, the amount is 3 times the March monthly BAS, up to a total of $50,000, and then continuing on in May and June to get to a total of $50,000. Once you've hit that, the amount is 1/4 of that amount for each of the July, August, and September, October months when the refund for the previous month's BAS comes through. So thank you all. If you've got any questions, drop me a note in the comment section below or contact me directly at ICGTAX Partners, and please stay safe.